Hi everyone, this is September 19th, end of the trading session in the US. I'm Mish Schneider, Chief Strategist for MarketGauge.com. Going to do another short video for you doing some short-term trading levels ahead of the Fed and then what could happen after the Fed. Of course, most people anticipating a pause and also some hawkish talk considering the rise of the energy prices lately. But be that as it may, we're going to cover the DAX, NASDAQ, and then a few of the commodities that we generally talk about, oil, gas, and gold. So let's start with the DAX here, and I'm showing you a little bit of a different chart purposely because I want you to see the real motion indicator here, very important. What you can always measure is price. What's harder to measure, of course, is momentum, and so we like to look for things like divergences. So in this case right now, where we saw a divergence was right here when it had a mean reversion, and the reason why I'm pointing it out is because it had a mean reversion to the upside. However, it never cleared that key 50-day moving average, and that is a key right now because you can see since it broke it here in August at the very beginning, it's tested it, tested it, tested it, tested it, and hasn't been able to get through it. So that's going to be your major resistance level to clear right now, figure 15,925 to round off. Now, right now we're getting closer to the support levels here, and if we go back to our little momentum indicator, what is really interesting here is this zero line. And the zero line is important because if I scroll back, we've been above that zero line since November 2022. So technically, we could say at this point, based on momentum, of course we've seen ups and downs on the momentum, but overall, the momentum is still okay. And of course, we're in right now a caution phase, not a negative phase, but a caution phase, which means exactly that, caution. So there's the talking heads and there's the charts. This doesn't necessarily look like the end of days, at least not at this point. So looking at this right now, with all of the support that we have, even if we take this low and just slightly underneath the candles of everything that we've experienced as we've gone through August and now in September, look how really nice it actually lines up with that 200-day moving average. Move it down a little bit more and we've got 15,540. Now we're about 25 basis points away from that. So here what you want to look at right now is where would we be more negative and where would we be more positive. To me, just looking very quickly at the charts here, I'm going to take a read of around 15,730. If we can get through that, then I would say there's going to be a good chance that we're going to get back up to that 50-day moving average where we can reevaluate. Underneath that 15,730, I think we're going to wind up looking like testing here closer to that 15,570. And then, of course, we'll be looking at what happens here at the 200-day moving average at 15,524. Now, just like the momentum improved here to a mean reversion, although the price isn't clear, what we'll also be watching for is if, indeed, this does break down in price under the 200, but the momentum does not budge under that zero line, then we might consider it to be oversold, but let's not jump ahead of ourselves. Okay, moving on to the NASDAQ 100. Okay, here is the cash index, and of course this is the 50-day moving average in the 200. So once again, let's start with momentum. And we can see that where the price has really been swimming around the 50-day moving average, we convincingly broke the 50-day moving average really back here at the beginning of August. So it started to show the negative divergence of momentum and price just when the price was still really near the highs. That's how reliable this can be. So what are we gleaming from it right now? What we're seeing is that it's underneath the Bollinger Band. We are getting into some support at the lows that we had here, which is still pretty far away from where we're trading currently. But the lows in the momentum here, we're still somewhat above it here, although the price is actually deeper in a sell-off than it is here. So it's possible that what this is telling us is that from the downside, and certainly with volume being light, maybe the momentum is starting to decline. And when I say decline, I mean stop declining, sorry. And so that could mean that the momentum will start to improve. What we'd really like to see, and even though we've seen it a few times, which is getting back over the Bollinger Band as a mean reversion, we would need to see a mean reversion happening with some confirmation of price. So let's look at price. At this point now, you can just sort of see, if you follow my cursor with some of the wick bottoms, but also the candle bottoms, right now, 15,170 looks to me like a really good place to keep an eye out for to hold. Above 15,170, I would say that your next place to really look at is going to be back up at this 50-day moving average at 15,330, just to round off. So that would be more of a positive bias if indeed the market comes in higher, or after the Fed meeting we have somewhat of a rally. Then the next area after the 50, if you look at all of the resistance that we now have that used to be support, up at around 15,415, and just to show you, it's these bottoms and this top right here. I'm discounting these for now, and so far that's worked out pretty good for y'all. So 15,415 to 20, you know, it's hard to be exact right here. That would be the next area of resistance. So on the flip side, of course, if we do break down and we cannot stay above this 15,000, what did I say, 15,170, or let's even call it 15,180. If we open up below that, based on what I'm seeing in the momentum, then I do believe that we would see another move lower. Today's low, of course, was 15,058. We've popped from there, so there is some buying coming in, and that's a good area, because if you look at the body of the candle here, it's exactly where it stopped, so that could still be support, 15,050. And then if that breaks down, of course, the next area we'd really be looking at would be at 14,880 before we reevaluate. At this point in time, of course, this is going to be affected by other indicators as well. Today they had an announcement, and this is a big one. I wrote a daily on it. Amazon is hiring 250,000 workers for the season, and they're going to be paying them US $20.50 an hour, which is quite high for temp workers. This wage inflation is something we're keeping an eye on. It also could be very interesting as Amazon's chart landed right on key support with today's low. Something to also watch, also maybe a lead indicator for what's going to happen with the NASDAQ. Okay, let's move on to the futures market. So when we did the video yesterday on WTI, we said obviously 90 is going to be key, but that I thought it would stop somewhere around 93.50. And right now you can see that we got to 93.69.70. Okay, I was off by just a few cents, not a big deal. Nonetheless, we did have a reversal there. So it was kind of a sense I was having that perhaps this was getting a little bit long in the tooth, a little bit too saturated, a little bit too popular, if you will. But now, let's just take a look and see what has to happen from here. I love that the open and the close from this day and the low from yesterday all come in at around 90.68. So let's put that in our minds. As long as we hold above 90.68, then I think whatever today was might be a fake out reversal top, and we can continue to go higher through that 93.50, 94 level. Of course, we're on our way looking at 100. A measured move that I talked about today on Yahoo Finance would be about 103, 105. Under 90.70, 90.68, then I think we'll break 90 pretty easily. People really thought that was such a major breakout area. I always felt that 80 to 82 was the bigger breakout area. And from there, of course, the next real area of congestion would come in at around 88.80. And then, of course, as we get lower, then it would be more like 88. And here's 86. And, of course, we're looking here at the October not the spot month. So keep that in mind. When we talked numbers yesterday, the spot was a little bit different than the October contract. Okay, let's move over to natural gas. I certainly have not changed my mind about natural gas, that I was actually looking to rotate some of the money out of oil, which we did yesterday, and more into natural gas. So we're long at about current levels. We've sat through some swings. But nonetheless, right here, 280 was my big number to start. So let's go with tomorrow. 280 is going to be, I think, a good area. Above 280, I've got to be more bullish, below 280, maybe we have to take another fresh look at around this 272 level, which is the 50-day moving average, before we start looking at 260. So what has to happen over 280? Then we're going to run into a little bit of congestion here around the highs, if you look back here, and then the opening and closing levels from this day at around 290. And really, it's when we get a close above this $3, and then apparently, 310 would be even better. That would be your 200-day moving average, and a change of a phase. Right now, we can say that we're in this recuperation phase. It looks pretty good. The volume patterns today were more of an accumulation in that they beat the volume patterns from yesterday, and we're certainly going in the right direction. And finally, let's end with gold. So keep in mind the contract I'm looking at. So before we were looking at October contracts, we're now back into the December contract, because that's what we've been looking at gold. What's interesting is gold is down a little bit, and just as I told you, natural gas is up on good volume. Notice the volume today is weaker than it's been over the last 3 days. So this doesn't necessarily mean very much to me, more noise. But looking at our levels, we talked about 1955 as the key for it to close above. It got up to 1958. So let's adjust it 1955 to 1958. Again, more of a bullish bias above. Obviously, we have to get through the 1965. That was another area we talked about, in which case I think we get to 1980 fairly easily. However, of course, if the market gets spooked by the Fed, if they wind up raising, which would be a surprise, but if they do, or the dollar, which is still hovering around 105, decides to get a little bit stronger, then this might break that 1950, which again, we could see an immediate $10 drop to 1940, and then eventually maybe make our way back down if gold is going to fail at around 1920. And remember, it is so important that you watch the gold miners. They reversed from the 50-day moving average today. GDX, looking at that, did not get through 30 as we hoped it would. Instead, it reversed. So we're still watching to see if it holds 28. Okay, that's it for now. Thanks so much for watching. Hope you all have a great Fed day. I'll see you again soon. Bye for now.